Yeah, good morning, everyone. So yesterday, we saw volatility in the international market, mainly driven by Iran uh, through Middle East countries like Kuwait and all, sending feeler that Israel should cease fire. And we saw oil price coming down, Brent by around three and a half, $4 to almost 71. But the reaction from Trump and Israel doesn't indicate that they want ceasefire immediately. The object of Israel is to force Iran to discontinue nuclear weapon program. And to that extent, both the countries, US and Israel, will are insisting on that. So post that the oil bounced back and now marginal down as compared to yesterday, around $0.5. So situation is back to where it was yesterday. And at such even equity market, what we saw some up move post that event pulled off. Even Asian markets are marginally positive or flattish, and futures of the US market are also marginally negative. So we had already seen last 2 day recovery from the bottom of the market. Whatever the market has declined since this war began, almost 65% has recovered. So now, what we feel that the market is more likely to remain in a range until and unless we get some positive filler from this, uh, and at such likely to remain in a range. So need I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note and we're likely to witness some range-bound trading session during the day. Yesterday, we have seen that the Nifty has taken a very strong support of 24,700, and we have seen a pullback rally towards 24,940 on the closing basis, which gives a relief sign on the technical front. Going ahead, as of now, the view remains a positive because the Nifty is well placed above the 20 days moving average, and from the last 2 days, the way that it has shown the recovery on the Nifty and the Bank Nifty side is really admirable on the technical front. As of now, we are witnessing a flag pattern formations on the daily chart on both the indices, whether it's a Nifty or the Bank Nifty, and it is under the consolidation of the flag body. Upside 25,200 is a crucial resistance level. We are witnessing that from the last few weeks, at least for 6 to 7 weeks, the Nifty is consolidating within the range of 25,200 to 24,400 levels. A breakout on either side will decide the clear trend of the market. But looking towards the current status of the technical charts, we believe that very soon we are likely to see a breakout on the Nifty. For the today intraday purpose, the first resistance is placed at around 20, 24,000, 25,100 levels. Any move above that level, we witnessed a positive momentum towards to 25,200 levels, whereas the support is placed at around 24,870. Any move below that level, we might witness some sort of a profit booking, which might drag the Nifty towards 24,800 to 24,730 levels. So the view will remain a positive as long as Nifty sustains about 24,700 levels on the closing basis. Coming towards the Bank Nifty, for today intraday purpose, the resistance is placed at around 56,350 levels. Above that level, 56,590, 56,700 can be seen. Whereas the support is placed at around 55,740, 55,500 levels. Stock specific, yesterday we have seen a very strong momentum on the IT pack. Among the IT stocks, HCL Tech really looks very good on the technical front. The stock is on the verge of giving its the breakout of 200 EMA. Yesterday it had touched the fit of the same levels, but we believe that we are likely to witness some sort of a breakouts of a 200 EMA. The stock is trading in the formations of the higher tops and higher bottom formations, which gives indication that it's likely to continue this kind of a rally towards those 1775, 1780 levels we are looking forward. So those who have missed out the yesterday's call, they can take a buy call at the CMP as well by keeping a strict stop loss of a 1670 for a target of 1775. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you, Swati. On the derivative front, apart from open interest, all the indicators are still positive. Open interest has shot up a little in the past few trading sessions. It has now come up towards 1.8 odd crore shares, and still comfortable but a little high. So one needs to again see, how it pans out for the next few days. Overall, still bullish bias has to be maintained. 25,000 levels holds a key resistance area with the highest call base, but that has been shifting now towards 25,500. We are seeing liquidation in 25,000 calls, which is a good sign. So once we break the 25,000 levels, we'll see further buying in Nifty, which can take Nifty towards 55,500 levels. Now, the VIX is below the 15 level, which is positive. Oil and gas stocks continue to do well, especially ONGC and oil. We expect further buying in these stocks. There's some price volume breakout and long built up has been seen in these stocks. So yeah, look out for the same. So that's it from my side. Like to the fundamental team to take over, please.
Good morning. On the news update front, Heikel has successfully completed the Brazilian Health Regulatory Agency's GMP audit for its Gigani manufacturing unit at Bangalore. The inspection carried out by Anvisa, that is the agency from Brazil, was for multiple APIs. So this is positive for the company. Thank you.
Good morning. So TCS and HCL Tech have announced some new contracts. TCS has partnered with Council of Europe Development Bank, wherein it would be modernizing its operations. And HCL Tech has announced a strategic partnership with E.ON, that is one of Europe's largest energy companies. So they would be establishing a new private cloud and provide network management across for this company. So that's positive for TCS and HCL Tech. Overall, traditionally Q1 is generally good quarter for Infosys and TCS amongst the frontline stocks. In the past couple of trades, most of the IT stocks have been doing well. On the flip side, we have to be cautious how the trade tariffs policies have affected these firms in the month of April. However, since almost most of the firms have been building good order book positions, so we believe the commentary for future can be positive even during the result season. So for long term, one can accumulate these stocks. Thank you. That's it from me.
Yeah, apart from this, Vishal Megamart promoter Kidara Capital is offering its shares in the bulk deal. They had initially planned to offload around 12-13% of their holding now, but they had upsized their offering and will be offloading around 26% of their holding. Currently, they hold around 74.55%, and out of that, they will be selling around 26% plus. So, bringing down their holding to less than 50%. So, that may be taken bit negative. The offer is also at deep discount at around 10% from the current market price. So, that is also likely to put up some pressure on the stock prices in today's trade. Apart from that, G promoter has approved in the board meeting that the G promoter will be investing around 2,200 crores as a preferential allotment of warrants to the promoter, which will increase their holding from around 3% to 18%. So that indicate some positiveness about promoter participating aggressively in the company's capital raising and stabilizing the business. So that can be taken, that will be a positive indicator for the G business. That's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So yesterday we had witnessed correction in gold. Those silver prices were holding up 1,06,000. Gold can further correct till 99,098,700 on downside. So wait for a pullback around 99,600 and initiate a sell with a stop loss of 1 lakh. And silver. One can buy as long as it is holding 1 lakh 6,000. So buying around 1 lakh 6,500 with a stop loss of 1 lakh 6,000, and on upside again 1 lakh 7,200, 1 lakh 8,000 is the target where one can book profits. However, some cautiousness below 1 lakh 6,000 is to be noted, and in copper one can initiate a buy around 875 with a stop loss of 870. On upside 880, 884 is the area where one should book profits. Wherein zinc one can initiate a buy with a stop loss of 250. On upside again the resistance area is capped at 255. So all in all 250 to 255 is the broad range. And crude oil yesterday witnessed in the correction and witnessed a pullback in the later half. And for trading purpose, one can initiate a sell around 60 to 50 with a stop loss of 63.50. On downside, 61.30, 60.50 are the levels where one can book profits. And natural gas, we expect prices to rally further. So buying on dips is recommended. One can initiate a buy around 320 with a stop loss of 310. And on upside, 335, 30, 38 is the area where one can book profits. So that's it from us. Thank you very much.